Okay, let's unpack this. You know how for, like, the last decade, the story of the electric vehicle startup has always been the same script.
Oh, yeah.
It usually starts with a really cool idea, maybe a beautiful prototype that looks like a spaceship, and
And
then
then a massive bonfire of cash.
massive bonfire of cash, just burning money while trying to figure out how to actually put the thing together.
It is the classic valley of death. In the automotive world, I mean, survival is the exception, not the rule. Most of these companies just run out of runway.
Exactly. But today, we're looking at a company that seems to have just climbed out of that valley, only to look up and see a completely different mountain they need to climb. We are doing a deep dive into Rivian's Q4 2025 earnings, which just dropped on February 12th, 2026, and their outlook for the year ahead.
And the headline here, it's not just about the trucks.
No, it's about an inflection point. For the first time, Rivian has posted a full year of positive gross profit. They've technically, finally, made money on the cars they sell.
Which is a massive psychological and, financial milestone. But, and this is so crucial for anyone trying to understand the future of this company, the documents we're analyzing paint a much more complex picture.
Right.
This isn't a victory lap. It's a moment of maturity. They are pivoting from a niche maker of expensive adventure vehicles to trying to become a mass market giant.
And not just a car maker, but a software provider for some of the biggest car companies in the world, which we will definitely get to. But the mission for this deep dive is to figure out, can they actually pull off this pivot? Sure. They have the cash, they have the plan, but 2026 looks like it's going to be a pretty wild ride.
Well, it's being labeled a transition year, which in corporate speak often means brace for impact.
Right.
It's going to be messy. The numbers might look ugly for a few quarters, but the destination, if they reach it, is significant.
So let's jump right into the shiny object first, because I know that's what everyone is waiting for, the R2. This is the mass market bet.
It is the existential vehicle for them. I mean, if the R1 was their proof of concept, the R2 is their business model. Deliveries start in Q2 of this year, 2026.
The stakes couldn't be higher.
They really couldn't.
And the specs, I mean, looking at the transcript, CEO RJ Scaringe sounds incredibly confident. We're talking about a starting price around, what, $45,000?
Around $45,000. That is the magic number, right? That's where you stop selling to early adopters who have money to burn.
And start selling to normal people who need a daily driver.
Precisely. That $45,000 to $50,000 range is the battleground. And what's fascinating here is how they're positioning it. Usually when a luxury brand moves down market, you expect a compromise. You expect the light version. But the launch edition isn't some stripped-down basic model.
Not at all. It's a dual-motor all-wheel drive setup.
With over 650 horsepower.
And over 300 miles of range. I have to stop you there. Yeah. 650 horsepower in a midsize SUV for $45,000.
I know.
That's a lot of car for the money. Yeah. I mean, my first car had maybe 120 horsepower on a good day.
It is aggressive. And it suggests they aren't just trying to compete on being green, they are competing on performance value.
Yeah.
RJ Scaringe actually quoted a pre-production review during the call where a reviewer called it, and this is a quote, "quite possibly the best all-around electric vehicle I've ever driven."
Yeah. That is some serious hype to live up to.
Yeah.
But we have to talk about the reality of building this thing. It's being built in Normal, Illinois.
Right.
Right alongside the R1.
Correct. And this is where the logistics get tricky and where you need to pay attention to the nuance. They're starting with a single shift for the R2 launch.
So not just flipping a switch and going 247.
No. They won't even move to a second shift until late in 2026. They're tapping the brakes before they hit the gas.
Which is smart.
They're prioritizing quality over just flooding the market. They know if the first batch of R2s has, panel gaps or software bugs, that $45,000 price tag won't matter.
The brand damage would be way too high.
Exactly. So it's a deliberate, cautious ramp up.
Which makes sense, considering the wait list is probably huge. But why is this car so important right now? Aren't there a million electric SUVs out there?
You'd think so, but Scaringe made a really sharp point. If you look at the sub $50,000 landscape, there is a surprising lack of high-quality choices.
Right.
You have hybrids, sure. You have internal combustion vehicles. But for a pure EV that offers this kind of tech and performance, it's a desert.
Yeah, he mentioned that if you want a mid-sized SUV with good tech, you basically have one choice right now. And we all know who he's talking about.
Exactly. Rivian is betting that the market is starving for an alternative to the Tesla Model Y. They believe they are the only compelling option entering that vacuum.
Okay, so we have the car. We know it's coming in Q2.
Yeah.
Full details dropping March 12th. Mark your calendars. But let's shift gears to the money. Because like we said at the top, you can have the coolest car in the world, but if you lose money on every single one, you're not a business.
You're a charity. And that's been the knock on Rivian for years. Analysts loved the product, hated the balance sheet, but 2025 changed the narrative.
So what's the aha moment from the report?
Okay, get this. In 2024, they lost $1.2 billion in gross profit.
A billion.
Just evaporated.
It's a staggering amount of money. But in 2025, they posted a positive gross profit of $144 million.
Whoa. That's a $1.3 billion turnaround in 1 year.
In 1 year, massive.
How did they do that? Did they just charge more?
That's part of it, yeah. The average selling price went up by about $5,500, but the real story, the one that's about operational efficiency, is on the cost side.
Okay.
They slashed the cost of goods, sold the KGS by about $9,500 per unit.
Per car. $9,500 per car. That's incredible. That's not just finding a cheaper screw. That's rethinking how the whole car is put together.
It is. I mean, some of it was luck. Lithium prices dropped significantly, which helps everyone.
But a lot of it was just getting better at manufacturing. They negotiated better contracts. They streamlined the assembly line. It's the unsexy stuff that actually saves the company.
Okay, so they were profitable in the cars. They have cash. They ended 2025 with $6.1 billion in the bank, plus another $2 billion coming from Volkswagen. So smooth sailing.
Well, not quite. And this is where it gets really interesting and where that transition year label comes in.
Yes.
If you look at the guidance for 2026, the analyst in me has to temper your excitement. They're predicting that automotive gross profit will likely dip back into the negative for Q2 and Q3.
Wait, what?
Yeah.
They just got profitable and now they're going back in the red. Why? That feels like moving backward.
It feels that way, but it's actually strategic. Launching a new vehicle, the R2, is incredibly expensive and complex. You can't just slide a new car onto an old line.
So you have downtime, retooling.
Exactly. They have to shut down lines, retool robots, train workers. That means the factory is running inefficiently while they ramp up. It creates a temporary financial hole.
So what's the bottom line loss look like?
They expect an EBITDA loss between $1.8 and $2.1 billion for the year.
Ouch. So they are taking a step back to take 2 steps forward.
That's it, exactly. And the delivery target reflects that. They're guiding for 62,000 to 67,000 vehicles in 2026. That's roughly flat compared to 2025.
So this isn't the year of the massive volume explosion.
No, this is the year of setting up the explosion for 2027. It's a year of investment. You have to endure the pain of the remodel to enjoy the new house.
Speaking of investment, let's talk about what they're investing in. Because Rivian keeps insisting they aren't just a car company, they are a tech company.
And usually when car companies say that, you roll your eyes.
I do. It usually means they put an iPad in the dashboard.
Yeah.
But they're making their own chips.
They are. This is the tech stack part of our dive, and it separates them from almost everyone else except Tesla. They unveiled something called RAP1.
RAP1, the Rivian autonomy processor. Catchy.
It is. But the strategy is sound. Instead of buying off-the-shelf chips from NVIDIA or Mobileye, which is what most others do, they're designing their own silicon.
Which saves money and lets them control everything.
Yeah.
So the brain matches the body perfectly.
Perfectly. And that hardware is powering their autonomy features. I saw some stats on universal hands-free.
Yeah, I wanted to ask about that. This is their version of autopilot.
Effectively, yes. And it's now usable on 3.5 million miles of roads.
Wow.
And customer usage has doubled. People are actually trusting it, which is the biggest hurdle.
Right. Getting people to actually take their hands off the wheel.
And the roadmap here is pretty wild. They're talking about point-to-point driving coming later in 2026.
So you punch in a destination and the car just goes. Highways, interchanges, exits, all of it.
That's the promise.
Yeah.
But the long-term vision, what they call personal level 4, is eyes off, hands off.
Eyes off. That's the dream. I can read a book, could doom scroll without guilt.
And Scaringe believes this isn't just a cool party trick. He said he thinks autonomy will go from a nice-to-have feature to a critical purchase decision maker by the end of the decade.
Basically, if your car can't drive you to work while you drink your coffee, it's obsolete.
It's like buying a phone without internet.
They're also launching Rivian Assistant early this year. It uses unified intelligence to connect with your Google Calendar and stuff?
Yeah, it's the AI integration we're seeing everywhere, but applying it to the context of a vehicle makes so much sense. The car knows you have a meeting, it can precondition the battery, set the climate.
Okay, so they have the car, they have the tech, but they also have some very powerful friends. We mentioned Volkswagen. That joint venture seems like a really big deal.
Oh, the VW deal might be the most important thing Rivian has done. It's been 13 months since they formed the JV. And this isn't just a press release partnership.
No.
Rivian technology is already being winter tested in Volkswagen Group vehicles.
That is fast.
Yeah.
In the car world, that's light speed.
It is. But here's the financial proof. Software and services revenue hit $447 million in Q4. About 60% of that came from the VW JV.
Wait, hold on. Nearly $500 million in revenue just from software and services in one quarter.
In one quarter. And think about the margins. Selling a car is low margin. Selling software code, that is incredibly high margin.
This proves their tech is a sellable product. They're not just selling cars to us. They're selling the brain of the car to one of the largest automakers in the world.
It's a massive diversification, and they still have the Amazon relationship, which remains strong.
Right, the delivery vans. I see those everywhere now.
They're launching new variants of those AWD, larger batteries. It's a steady foundational part of their business that keeps the factory running.
So let's zoom out. We got the R2, the financials, the tech, the partners. But what about the competition? There was a fascinating nugget in the Q&A about a certain competitor leaving the high end of the market.
This raises a really important point about market dynamics. During the Q&A, it was noted that a major competitor, let's be real, it's Tesla,
It's always Tesla.
is ending production of its two high-end models, the Model S and Model X, next quarter.
Which is huge. I mean, the Model S started this whole revolution. If they stop making it, that leaves, what, like 20,000 units of high-end market share just up for grabs?
Exactly. These are orphaned customers, wealthy customers looking to spend $80,000 or $90,000. And Rivian's R1S is already the best-selling EV over $70,000 in places like California and New York.
So if you want a luxury electric SUV and you can't buy a Model X anymore, all roads lead to Rivian.
They are perfectly positioned to capture that market while simultaneously attacking the mass market with the R2. It's a pincer move.
And this all ties back to that software-defined reality RJ keeps talking about.
It does. His belief is that every automaker faces a choice. Build your own software stack, which is incredibly hard.
Just look at Volkswagen's struggles before this deal.
Right. Or buy one, like from Rivian, or lose market share and die. Rivian is betting that most legacy auto will eventually have to buy.
And Rivian wants to be the seller. That turns them into a platform company, not just a car company.
Precisely. And platform companies tend to get much higher valuations on Wall Street.
So what does this all mean for the listener? If you're just a fan of cars, or maybe an investor, there's a lot of noise here.
Well, if you are a consumer in the market for a mid-sized SUV, the R2 at $45,000 is the thing to watch. The specs are undeniably impressive.
But you'll need patience?
A lot of patience. Deliveries start Q2, but volume comes later. Don't expect to walk onto a lot and drive one home in April.
And if you're looking at this from a business perspective, trying to figure out if Rivian is the next big thing.
Look past the messy 2026 earnings. The numbers will look bad in Q2 and Q3. That's noise. It's just construction costs.
Okay, so what's the signal?
The signal is the software and services revenue line. If that keeps growing, Rivian changes from a hardware manufacturer to a technology licensor. That is the high-margin growth engine.
It's basically, come for the cool trucks, stay for the software margins.
In a nutshell, that is the bull case for the company.
Before we wrap up, I want to leave everyone with a final thought from the call. It's a bit sci-fi, but it's becoming real. The CEO mentioned that autonomy will eventually allow vehicles to drive empty.
It's a profound shift in how we think about assets.
Right, because right now, my car sits in the driveway 95% of the time. It's a giant metal paperweight that I made payments on. But if the car can drive itself, does that change the entire concept of ownership?
It completely upends the economics. If it can drive empty, it can work while you sleep, pick up groceries, pick up your kids, taxi other people around. It stops being a depreciating asset and starts being a revenue generator.
Or are we moving toward a world where you don't even buy a car? I mean, why sell me a car for $45,000 if they can make $100,000 operating it as a taxi?
And whether Rivian sells that capability to you or operates the fleet themselves, that is the trillion-dollar question. Are we moving toward buying mobility rather than metal?
And the technology they're laying in 2026 suggests they are preparing for exactly that future. Something to mull over while you're stuck in traffic, driving your own car today. Keep an eye out for March 12th for that full R2 reveal. We will definitely be watching.
Absolutely. It will be a pivotal day.
Thanks for listening to The Deep Dive. We'll catch you on the next one.